Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden in plain sight within company filings. And today we're talking about Rallybio Corporation. And let me tell you, their latest filing is a bit of a nail biter, like trying to guess if your favorite team will make the playoffs with a last minute comeback. We're diving deep into a document that basically tells us whether Rallybio is staying on the big stage or facing a slight detour. Stick around because this is going to be interesting, and if you appreciate getting the real story behind corporate moves, make sure you're subscribed. We also have a Discord community packed with fellow finance enthusiasts linked in the description below. Alright, so what we have here is a current report, essentially a company telling us about something important that just happened. The big news is about Rallybio's stock and where it's trading. You see, for companies to stay listed on major stock exchanges like Nasdaq, they have to meet certain rules. One of those key rules is that their stock price needs to stay above a certain minimum, usually $1. This helps ensure the stock has a certain level of value and stability. Now, it seems Rallybio has been having a bit of trouble with this lately. They got a notice from Nasdaq saying their stock price had been too low for too long. Nasdaq gave them a deadline, which was August 25th of this year, to fix it, but unfortunately, as that deadline passed, they hadn't quite managed to get their stock price back up to that required minimum. So what happens next? Well, Nasdaq has approved Rallybio's request to move their listing to the Nasdaq capital market. Think of this as moving from a premium lane to a slightly less exclusive one, but still very much on the main track. It's not an immediate kick off the exchange, but it does come with a new set of rules and tighter scrutiny. The good news here is that Nasdaq has given them an extension. They now have an extra 6 months until February of next year to bring their stock price back up. That's a pretty significant amount of time to turn things around. And don't worry, you can still find Rallybio stock under the same ticker symbol, LIB. It will just be trading on this slightly different tier of the Nasdaq. So what are they planning to do to get their stock price back up? Well, the company is looking at their options. One of the most common ways companies do this is by doing a reverse stock split. Imagine if you had $10 bills and you traded them in for $100 bill. You still have the same amount of money, but the number of bills you have is less and the price per bill is higher. That's essentially what a reverse stock split does for shares. It reduces the number of outstanding shares, which in turn usually increases the per share price. Now, for the serious part, if they don't manage to get their stock price back up by that new February deadline, then Nasdaq will officially tell them they're off the exchange. It's a serious consequence, and it means their stock won't be easily traded on a major market anymore. However, they do have a last resort. If they do get that delisting notice, they can appeal it. They can go in front of a special panel at Nasdaq to argue their case for why they should be allowed to stay. It's like trying to get a final chance to plead your case in front of a judge. Finally, the filing also includes some standard exhibits, which are basically supporting documents. In this case, it's information formatted in a way that computers can easily read and process, useful for regulators and financial data services. Now, looking at Rallybio's situation, this filing highlights a critical challenge they're facing. The fact that their stock price has dipped below the dollar mark suggests that investors might be losing some confidence, or perhaps the market isn't valuing their future prospects as highly as it once did. A prolonged period below $1 can be a red flag, indicating potential underlying issues with the company's performance, its pipeline, or investor sentiment. The move to the Nasdaq capital market, while not a delisting, does signal a step down in terms of the exchange's requirements and the prestige of the listing. It's important to remember that the Nasdaq capital market is for smaller companies and those that may have had some compliance issues in the past, which is exactly where Rallybio finds itself. The company's intention to explore options like a reverse stock split is a common strategy to artificially boost the share price to meet listing requirements. However, a reverse split doesn't change the fundamental value of the company. It simply consolidates shares. If the underlying business performance doesn't improve, the stock price can quickly fall again after a reverse split. It's like rearranging the deck chairs on the Titanic. The key for Rallybio now is to not just focus on the stock price, but on demonstrating real progress in its business. What are their drug candidates doing? What are their clinical trial results? What's the outlook for their product pipeline? These are the real drivers of long-term value. If they can show significant advancements and a clear path to profitability or revenue generation, investor confidence will naturally follow and the stock price will rise organically. Without that, even a reverse split is just a temporary fix. The risk here is that if they fail to make substantial progress in the next 6 months, they could face delisting. That would make it much harder for investors to buy and sell their shares and could significantly damage the company's reputation and ability to raise future capital. To sum it up, Rallybio is in a critical period. They've got a lifeline from Nasdaq, but they need to deliver tangible results to prove their worth. The coming months will be crucial in determining whether they can navigate these challenges and reclaim their position. What's your take on Rallybio's situation? Are they likely to turn things around with a reverse stock split, or do they need to show more fundamental business improvements? Let me know in the comments below if you found this breakdown helpful. Give this video a thumbs up, and don't forget to subscribe for more in-depth corporate analyses. Also, join our growing Discord community for more discussions and insights. The link is in the description. Thanks for watching, and I'll see you in the next one.